we're going back to back today because in YouTube, you could actually pretend you're in a time machine, record it 1 week, post it the next, and nobody would know except if they watched both videos and said they're wearing the same clothes. Yes, I broke the rule, Adam Bursan. I didn't change my shirt between videos, but that's okay. We're back and we're going to talk the next 15 minutes about chargebacks. Great topic, hot button topic. Hopefully you clicked on this topic wanting something to learn about chargebacks. And before you click away, hit the like button, comment below, subscribe to the channel so we can continue to grow the channel and provide relevant content to the insurance industry. So Waylon, we're talking chargebacks today. What are they? How do they happen? And how do I avoid them? Let's start with the basics. What in the hell is a chargeback?
Absolutely. So chargebacks exist on both the health and life side of the business. Specifically, they're a lot more dangerous on the life side. So the way a commission works, right? So I'll do a life insurance deal, for example. Let's say it's a $1,000 annual premium. Okay. So it costs the client, whatever that is, $85, $86 a month. The insurance companies will annualize that $1,000. Let's say you're at 100% contract. So you're owed $1,000 that first year on your commission. You then get an advance of 9 months. So you're going to get paid $750. Some carriers roll fast, some not real fast, but one way or another, you're going to get your $750. Let's say things are going great. You got that payment set up for the third of the month and the money's been there for the first 3 months, but fourth month came along and Miss Jones didn't have the 80 some dollars and change to make her payment. Darn it. There's a cancellation. Then if you're not able to resolve that, get new payment information, get it taken care of, well then boom, we got what's called a chargeback. Now you were advanced $750. Okay. Typically whatever the client has not paid on, whatever months, you're going to be charged back in that amount. So for this example, we're talking $450, $500. Well, guess who pays that back? Well, if you're a good agent, you do. If you're a bad agent, your upline does, which we'll talk about later in the video. But a chargeback is just that. It's exactly what it sounds like. It's when the client, we go to charge them, the insurance company does, and it doesn't happen. It gets pumped back.
Well said, well said. Let's talk about what can cause a chargeback. Besides the obvious cancellation, it can be weak or poor closing techniques. What are some of the worst closing techniques you've ever heard taught online that would almost induce a chargeback?
Sure, and take some of this with a grain of salt simply because worst is relative. I think that the people that rack up the chargebacks typically are actually very good salesmen a lot of time. They're almost too good. But the second thing there is I think that a lot of the entirety of the presentation they've been taught is the bad sales tactic in and of itself. So I think, we always say always be closing. I agree with that 100%. But there's a right and a wrong way to do it depending on the market that you're marketing to. So you're talking to Miss Jones, you've gotten her income of $809 a month, and you sell her a $237 a month final expense plan. I'm sorry, but you're selling someone something that's a quarter of their income every month. I'm not saying, you're a bad agent by any means. Obviously, you're doing something, like you're giving them candy or something, but yeah. There's a decent chance that $237 a month isn't going to be great for Miss Jones, who makes $809 a month. Yeah. So I say that to say that the biggest tactic or bad move is really just, and I don't even want to call it overselling. It's just being a buffoon and not paying attention to, hey, this might not be the best idea. Like, yeah, it's exciting in the back of your head because you're like, man, I'm about to get this $2,000 advance cap max advance. It's going to be awesome. I'm going to be pumped. Yeah, well, guess what? In 2 months, you're going to be real pumped when you're paying it back. So you're better off paying the $82 a month and keeping it on the books than the $207. That's 40% of someone's income.
Yeah, advanced caps are there for a reason. As much as most agents despise the existence of them and somehow the different amounts that they may be, advanced caps of $1,000, $2,000, $3,000, I think are pretty reasonable.
Absolutely. I mean, there's carriers out there that have household maxes.
Now that's bullcrap right there. Let's talk about that.
Yeah. I mean, look, from a company's perspective, it's not. I mean, it's brilliant because the company's like, oh, you can't even get debt with us. But from an agent's perspective, it's tough because it's like, damn, I can only make how much in one house? Like, I just sold $3,000. I'm going to make what?
$800.
Yep. So that can be tough, but no, I mean, with the majority of carriers, it's from the carrier's perspective, it's a no brainer. It's actually there to protect you.
Yeah.
Like if you're in a position where you need a $6,000 advance cap, whew, I'm sorry. I don't know what's going on in your life. Like, I don't know who's after you, but that's tough. So $2,000, $3,000 on a one deal should be gobs plenty to be okay.
I think anywhere between 1,000, 1,500, 2,000. I think 3,000 might be a bit excessive. I mean, you're going to run into so few of those cases anyway. When it happens, it happens.
Yep.
But household caps, like you write a husband and a wife, and if the monthly premium is higher than $60 in the house, you're not getting but 800. I think that makes cash flow very difficult for those brand new first year, second year agents trying just to make it from one week to the next.
Yeah, absolutely. I mean, it makes it nearly impossible if you're on a steady, high dollar, high ticket, high quality lead program.
Yeah. Now, of course, when we say things, we say about the 99% of the situations. There are 1% variations where there's always that kind of situation, but just general concepts. Generally speaking, closing techniques where people say things like, well, the insurance company needs to think about it too. Tell me your thoughts on how that might create a chargeback.
So just to make sure I'm on the same page as you. So the insurance company needs to think about it too, as in that would be what the agent is saying to the client to close them.
Well, the client says, I kind of like this, but I need to think about it, which is
all
horse crap anyway.
There's nothing to think about until, the insurance company thinks about it. They don't even know if you're going to get approved. Well, Guess what? That's great. That is phenomenal. But a lot of times that's a big red flag. If you're to that point of closing, that's going to make up a good bit of your chargeback clients because they don't even really want to do the application. You've now basically created confusion on their part just to get them to give you their social and their height and weight. And, if you're a good agent, depending on how you do your fact finding, you might already have the payment details too at that point. You're down to the very last couple of things that you might gather. Again, I don't want to use the word bad, and I think I did, but I don't mean bad in a sense of you're a bad agent. I mean bad in a sense of that could potentially be a bad client because they're already difficult. It's just going to get harder and harder. That's the type of person that you've changed their Direct Express card 4 different times, and the banks are bad because they steal all their money and all the great one-liners you get from our favorite clients.
Yes. Unfortunately, there are just sometimes it's okay to walk away. Find somebody who is genuinely interested in the purchase of insurance, who genuinely has good bank information and wants what you have. And I'd rather you find 4 of those quality applications a week than 12 and half of those fall off. Because then that's just, even if you break even, it hurts the mindset to constantly see a rolling churn of chargebacks because you're not writing quality business.
Yep.
Other way that you can create chargebacks is by writing people with sham bank information, and not like fake bank accounts. That's a terrible idea and it's probably fraud, but like net spend, your spend, my spend, plastic payers. Talk about the persistency on plastic business.
So this is actually good. So my perspective on this has changed very slightly. If they have I spend, you spend, we spend, net spend, any of those, don't write it. Just don't write it. Don't, unless they have something else, don't write it. Now, exception, Direct Express business.
Yeah, perfectly fine.
Write it. Write Direct Express all day. Again, given you've got a Social Security billing carrier that knows what they're doing, we could get into that all day. That's another time, another call. But write Direct Express all day long. But anything else, they've got a Cash App card, a frickin' Venmo.com number, a PayPal, Elon Musk mask card. Like, don't use it. Just don't use it because something stupid is going to happen. It's like something stupid. You're going to be irritated and you're going to be going back and forth and you're going to pay a chargeback and life's going to be rough. So just, be careful.
Here's a nuanced one. I have a Direct Express card. That's where my Social Security money goes to. No, not me, just in general. And then I take all the money off this card. I go over to Citizens Bank, deposit the money in the bank account, and the agent writes it on the bank account because they wanted the advance, even though they would have gotten the advance because everyone advances anyway on Direct Express. Bad idea?
Yeah, not a great idea. So Actually, we do have a carrier now that does advance on Direct Express. We'll keep that in the back pocket. But again, I truly believe at this point, Direct Express business actually is pretty good business. Again, given that you get the correct Social Security date, whether it's a Wednesday, a first, third, whatever it is, and you set it up appropriately. Now, it can be a nightmare too. Again, if you go with a carrier that doesn't draft correctly and you get a third of the month payer, and they draft it on the 5th, all it takes is one time, and that client is done. But it's also the same thing for people with checking and savings that are on that tight budget. So I truly believe at this point, Direct Express is actually pretty good business if you know what you're doing.
Yeah. Let's talk about opening bank accounts for grown adults. What are your thoughts, feelings, or beliefs on opening a grown-ass adult a bank account?
Yeah, listen, that's tough because think about it. Like if you're the insurance agent, the final expense guy or girl, you just set an appointment with them 3 days ago from a card they filled out a week ago, and now you're having to drive them to the bank to open an account. How reliable you think they're going to be with that bank account until like one overdraft fee hits because they bought too many cookies at Walmart, and then you're the devil because you opened that account. Like so many weird things can happen, and I'm not saying don't ever do it, but it's just and one side of it is like, man, you're dedicated. Like that's great that you're willing to do that for your people, and it is great. It's awesome. But it usually doesn't end well, unfortunately.
I really thought that was a good idea for a while too. And I really was like, I'm doing a service. No, they just are who they are. And they're not going to become someone different just because they filled out your piece of junk mail. And there are probably better clients for you to go see. My favorite, and I mean this with all the respect to everyone who's ever purchased insurance from me, but how many calls do you get the first week of the month where they're like, I had to change my account because fraud happened on my account? No, they just mismanaged their money.
Exactly.
And they were never taught money management. They were never coached. They were ignored by a great swath of society because of who they were. And that's why we're there to help them. But they are not having fraud constantly committed on their account. They're not managing their money appropriately. So if you're going to go open an account for them, what do you think is going to happen? There's probably a reason they don't have an account. It was probably taken from them years and years before you ever even entered the business. Let's talk about chargeback avoidance, like where an agent knows they've got debt with company A, but they're writing company B instead, and then company C, all because they don't want to clear up the debt with company A.
Sure, that happens a ton. And that's one of those things that from a managerial perspective has to be monitored. And you have to understand that people will try and write, carrier B when carrier A has a debt balance, and carrier C when carrier B has a debt balance. They try to balance that all out. Know this. The intentions are typically good when you get started on something like that. However, the results are almost always bad because people don't understand how quickly or slowly carriers will roll debt, and debt gets rolled. And then we're in the rigmarole of, wow, how do we do? Like, do you pay my upline? Do I pay the carrier? What do I do? No one knows how it works. So getting to that point is a lot easier than you think. And a quick way to get there is by trying to balance your own debt by writing other carriers and making payments.
I also think if you're only writing like 3-ish companies, you're really never going to get into the debt triangle or the debt hole in the business. Like you're writing your lead carrier that takes 80 to 85% of your business, your secondary carrier that covers that other 15%, and somebody with a strong mod or GI option on that stuff you can't cover with the other two. You're really, if you're consistently writing business, you're not going to be digging yourself out of any significant holes, right?
Exactly. I mean, the numbers just work out that way. And that's the beauty of keeping your book of business pretty constricted if you can.
Yeah. Now, of course, one trick that I did learn, and hopefully someone's watching to hear this and will implement it, when you've got a lot of carriers and you're a sole producer and you have them just because you can have them, you don't have to have all of them on advances. I used to have a great swath of my carrier lineup as a single producer on limited advances, like 3 and 6 months, several of them on as earned. So I could write a case if it was a niche case and not write it on like modified if I didn't want to. But I didn't want to be advanced on, Settler's Life that I wrote once a quarter. God bless Settler's Life, rest in peace. But you have that ability to select your advances when you fill out that contract that you probably didn't read.
Exactly. And that's a great tip.
So with the last few minutes that we have, we already had one question. We love to end the videos with this question, and I'll twist it a little bit different since we've already used a good one today. what would a mistake be, or what's a mistake an agent can make after taking some time off, be it vacation, sick time, family time, whatever? What's the biggest mistake they can make now that that time is over?
Oh, the biggest mistake by far and away, and I'm living this literally today right now because I took the first, I still worked, but I took the first Waylon vacation probably in 5 years. I actually was just relaxing a little bit. The biggest thing is waking up and just listening to your feelings and emotions too much. Just saying, you know what, I'm going to take it slow today. I'm going to ease back into things. It's Monday. I'm still on vacation brain. I can tell you without a shadow of a doubt, all that does is just delay the inevitable, that you're already behind, and you being in that mindset and listening to it and allowing yourself to fall into that trap of, oh, it'll be okay. It'll be all right. No, it won't. People rely on you. People need you to do what you're supposed to do so they can do what they need to do. And just showing up and saying, listen, I'm punching in at 8 and I'm punching out at 8. We're back to the normal schedule. And, it's what we got to do. There's no other option. So not giving yourself too many options, not listening to your feelings and emotions, and just doing what you're supposed to do.
Yeah. I mean, realistically, that's $1 million point you just made there, that people are relying on you either as a producer for your family or your own personal budget, the people that you're going to go out there and sell insurance to that need a competent agent to meet with, the people that everybody in that circle that you affect rely on you to get your rear end in gear and go back to work. And if there are other people that work below you or with you or whatever word you want to choose, they rely on you as well. So go back to work. Take time off, but immediately get back to work, because work isn't going away, but it really may if you don't go back to work.
Yep, 100%.
Thanks for watching, guys. Like the video, comment below, and subscribe so we can continue to grow this channel. And as you swipe through the shorts, if you see us, throw us a thumbs up there as well as we work to continue to build this channel for your benefit. Thanks for watching.